Hi, welcome to our channel. As always, the information brought to you here is meant to entertain you about the real estate market in Canada, and in particular, the housing market in Vancouver and Fraser Valley. We like to ask for your support by giving us a thumbs up and subscribe to our channel to be notified our future videos. This video is brought to you by 3Q Marketing Services. Today, we like to take a closer look at the real estate sales data. Greater Vancouver and Fraser Valley experienced a huge surge in sales and a rush by home buyers for detached homes. These homes were concentrated on homes under $1.8 million. The surge in sales were prompted by pent-up demand due to the pandemic lockdown and a change in lifestyle needs for larger spaces. Fueled by liquidity from the Canadian banks, current low interest rates is projected to last until 2023. The housing market is not at risk of crashing, for now. As can be seen on this latest October sales chart, total home sales the past few months managed to stay above their 5-year average total sales. Detached home sales in both Vancouver and Surrey were significantly above their 5 years average. Richmond and Burnaby, on the other hand, were just staying above their 5-year average. The October detached home sales appeared to have lost some momentums. Townhouse sales in the 4 areas appeared to be relatively stable. Surrey, in particular, showed very strong demand for townhouses the past 4 months. The condo market in Greater Vancouver and Fraser Valley is the most vulnerable. It can roll over from the current seller market to a balanced market. If the situation worsen, some real serious price decline can happen. The COVID-19 pandemic fundamentally wrecked the Canadian economy and labour market. The reported 11% mortgage deferment for CMHC-insured mortgage translate into thousands of homeowners who had taken advantage of the bank's mortgage deferment program. How many of these homeowners will be forced to sell their homes? And how well the market can deal with the new supply of homes? A collapse in the condo market can lead to a pullback in buying interest for townhouses and detached homes, thereby leading to a change in market sentiment. A need-based supply and demand for housing will determine the true value of homes as shelters, rather than determined by buyers' fear of missing out and investors' speculation. A good indicator to watch is the sales to active listings ratios. As defined by the Vancouver Real Estate Board, sales to active listings ratio of 20% or higher indicates a seller's market, where there are more people looking to buy than there are homes available. If you are listing a home in an area with a minimum of 20% sales to active listings ratio, you're in a good position to sell. It is also important to know that the 12% to 20% is considered a balanced market. This is when supply and demand are about the same, with home prices rising in line with the long-term average rate of inflation. On the flip side, a buyer's market is typically less than 12% sales to active listings ratio. This is when there are more homes for sale and a smaller percentage of the available listings are selling. If you are buying, you can get a better price when this ratio is below 12%. This is a good indicator to watch when buying or selling your home. For now, the ratios for detached, townhouses and condos are in the seller market. But a change in market sentiment can quickly turn the current seller market to a balanced market. The condo market is expected to be the first one to turn. We will continue to monitor the housing market situation and update you accordingly. For more information on buying or selling your home, kindly contact James Wong at 604-721-4817. Thank you for visiting.